G'day everyone, welcome back to Pete's Investing. Today is June 9, 2023. This is the US dollar basket update. On a weekly, we've broken out into a neutral. On the daily, we're in also a neutral after it was in a bullish momentum for a few days. And on the hourly and the daily, I'm going to demonstrate some divergence, which are probably still all working out. Looking at the weekly chart first, we look at and marry the moving averages of the price chart along with the moving averages of the CCI 150, and you can see they're not aligned. And by alignment I mean if they're both bearish, gives us this bearish signal like it was there, or if they're bullish, it gives us a bullish signal. At the moment they're not aligning properly, so it's giving us a neutral bias. So avoid, if you want to be conservative about your trading, avoid trading unless the weekly and the daily align. On the daily likewise, it's in a neutral positioning because of this bearish candle, and that's causing it broke down from a bullish momentum early on in the last few days. But notice how if I drill out as well, there's this bullish divergence playing out on the CCI, and that's still in play, versus a bearish divergence on the price chart. And the way you would look at that is you draw a Fibonacci retracement to a recent high. It doesn't really matter which high you take it to. In this case, we've taken it to that point there, and our initial target would be where that rectangle is between the 38 and the 50% Fibonacci retracement levels. And if I zoom out, there was also another divergence playing out here recently, a more longer term, bearish divergence versus a bullish divergence on the price chart. The price broke below that channel, and it hit the 38 to the 50% level initially, and it fell and even below the 61% level as well. So that worked out as well. This one is still in play, as I said. If I zoom into the hourly chart, I did draw a divergence here initially on that little range there, and the price sort of dropped off. It didn't work out. Now that wasn't a failure, because what I'm going to do now is actually extend that. Notice the CCI is still declining. And as well, if I pull that out, you could probably, I initially stopped it there, price drop but not far enough. You could have stopped it there. Notice the CCI was still dropping. I'm going to pull it out to that point there and stop it there, because the price has dropped well below our level. So what you do now is you draw a channel between that between that level there and that high, and you bring it down to the lowest candle within that range. That's the lowest candle, and then you draw a Fibonacci retracement to one of the previous lows, and that would have been that point there. So our target, once it fell below there, our target would have been initially, if I draw a rectangle between that level, initially that would have been our first level. You can see there it's hit our first level target between the 23% and the 38% retracement. And if it falls any further, our second level target will be between that 38% and the 50%. So I'm going to leave that in there and see how it goes. It may bounce from that. So these retracements on these divergence doesn't necessarily mean a long-term reversal of the price. It just could be in a little bit of a retracement before bouncing up again. So theoretically it could have, and if it does work, sometimes these divergences don't work. But if it does work, it could just be a little bounce like it did there. In this case, it's bounced even lower. So we'll see how that goes in the coming hours, as well as a potential bearish candle, bearish momentum. If I zoom out, you can see I've got a bullish backtest as well as a bearish backtest. You can see here primarily we're in a long positioning, and that's where the bullish backtest work quite nicely until we hit this downturn, in which case we average down. We don't use stop losses. So the way to avoid that, and the way to avoid those short positions there, as I always say, and that's why I spoke about this in the beginning, you trade primarily bearish in that period when the price is declining. That's your primarily bearish trades. And in that same period, you see they're primarily bearish trades on our indicator. A couple of long signals, but you ignore those and you'll go on primarily bearish. And that's where you'll notice there when we went during that period and the price declines, our profitability on the bearish backtest showed improvement. And likewise, the opposite happened during back here when the price was moving up, primarily bullish trades, again making sure the weekly and the daily align, as well as the hourly. Primarily you would have been single entries, and that would have been a nice profitable trade. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also do some weekly scans of stocks, currencies and commodities. Thanks for watching, and like the channel and share it, and we'll see you in a future video.